A good chunk of yesterday's move was in, of course, U.S. assets, no surprise, but the ripple effect, I think, was what was notable. You saw one of the worst performances in the offshore yuan and some of those tariff-exposed currencies like the Mexican peso, for example, not to mention some weakness in the euro as well as the pound. The tariff, the more exposed you are to a Trump tariff story, the worse your currency did yesterday. I would argue it's the exact opposite narrative today. And I think this is a really fascinating one because some of it is paring back simply the move yesterday. It's that simple. For other currencies, you are starting to see the dynamic of the last, I want to say, year, maybe 2 years in terms of the carry trade also fade. I think this is where the Trump trade, the election story, and the election fallout is really married with some of the monetary policy decisions you are seeing around the world as well. I'll give you an example. The most watched currency trade in terms of carry is the Mexican peso versus the Japanese yen. It is the easiest one in terms of kind of lowest interest rates to higher interest rates, and that has been a very juicy trade in a year where there's been a lot of geopolitical volatility, a lot of kind of uncertainty around monetary policy as well. Today, you are actually seeing a lot of the investor community come out and say that carry trade that has been so attractive and so juicy is no longer holding that same kind of appeal simply because on the monetary policy front, you do see a more relatively hawkish Fed, a weaker, more dovish ECB, a weaker economic story in Europe. Suddenly, the BOJ, the incentive to hike at the BOJ gets a little bit higher. And on the other side of that trade, the Mexican peso, which we're kind of going to use as a proxy for some of those other tariff-exposed currencies, is also poised for some weakness. So suddenly, that spread that has been such a key part of investor portfolios kind of loses its luster, and that's really where the election results marries the monetary.
Yeah, and to that point, we had the Fed decision today. Look, we can talk about the projections, and maybe that's where we go in terms of how they move forward in the months ahead into next year. But the elephant in the room as well is Jerome Powell's future, quite frankly, and whether or not this is the end of a truly independent Federal Reserve.
It absolutely is. I mean, look, there are a couple of hurdles that they have to pass to get through that. Congressional makeup is a big one, and what the House looks like is going to be a big piece of it as well. If you do start to see that red sweep, which I will admit is looking fairly likely at the moment, even though we haven't gotten those full results, that's where you could start to see some of the congressional mandates around the Federal Reserve change. But again, it requires a large majority. President-elect Trump cannot do it by himself. A place where you might see that show up more in terms of the currency picture, especially, is going to be in those Eastern European currencies. And a lot of this, I think, speaks to the narrative around this election that has changed. And I caution everyone to really keep an eye on what that kind of dollar strength off Trump story really looks like, because in the last 24 hours, when it comes to the read-through on European currencies and the NATO and the Ukraine story, that has completely turned around.